makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Hotter than expected U.S. inflation data forces traders to scale back their bets on Fed rate cuts, with the yield on the U.S. 10-year hitting its highest level since November. Well, attention now turns to the ECB. The central bank is expected to keep rates on hold, but signal that easing will start in June. Plus, our exclusive conversation with the chief executive of Telecom Italia on the company's plan to sell its landline network to KKR for as much as 22 billion euros. Now, first thing is first, I'm looking forward to the interview with Pietro Labriola, but let's take a look at the European markets map, because it is a lot of focus, of course, on what we've seen with rates. The ECB expected really not to say anything unchanged, but the focus then moves to the Fed. Now, calm a little bit restored to the markets and bond markets, I would say, after the crazy U.S. inflation data that we had yesterday that forced investors to really scale back bets on the Federal Reserve's interest rate cuts. Now, energy stocks do seem to be outperforming Europe's little changed. Europe stocks index is, as a whole, you can see the FTSE practically unchanged. We're seeing a little bit of a lift to the CAC 40, but again, nothing huge. Treasuries, again, little changed after the index showed that the debt in the biggest decline since 2022, while a gauge of global bonds suffered its worst performance since February 2023. S&P futures unchanged. Stocks Europe 600 once again also unchanged. Now, cross-asset, some of the things that we need to look out for is, for example, gold. Also, the index of dollar strength was steady. Yen increasingly weaker to levels not seen since the 1990s against the dollar. That was yesterday. Now we're seeing a little bit of support, but the depreciation has also actually sparked some fresh speculation that Japanese authorities might step into the market to support the currency. And this is on the back, of course, of what we saw with dollars. And iron ore, 0.3% higher. Now, onto a big corporate story, and Italy's government says it will support the blockbuster deal by Telecom Italia to sell its landline network to KKR, despite investor concern around the company's debt. Now, the finance minister, Giancarlo Giorgetti, calls the plan the only realistic option. The company has been openly challenged, though, by some minority shareholders. I'm very pleased to be joined now by Pietro Labriola. He's the chief executive of Telecom Italia. Mr. Labriola, thank you so much for joining us today. You've had a couple of minority shareholders with big voices saying, look, they'll vote against this. There's concern going forward. Are you positive, 100% positive, that the deal will go through?
Yes, I'm 100% confident, because in any case, if you look also to the alternative, none of them is saying that we have to block the deal. So it means that everybody are confirming that this deal is the only way to give a strategic and industrial new opportunity to our company and to solve once and forever the debt issue. So I'm very confident about that.
And I know you've defended, even on this program, of course, the industrial sense of the deal. Are you also confident that this will be wrapped up by the summer?
Yeah, but sure. And it's not only me. We confirm, but also KKR gave a confirmation to the market that everything is on track. But I think that is very, very important to stress that this is also an industrial deal and not only the solution of the financial constraints of the group. And if you look all around Europe, you are starting to see that there are also other players that are evaluating the breakup by two of the company, dividing infrastructure from services, because these are two different business models that are getting two different paths of growth.
I mean, this is a world premiere, and I know, again, you've said this makes sense and could unlock, future, it could be a template for other companies. But earlier this week, we had leading proxy advisors, such as ISS, but also Glass Lewis, recommending that investors actually vote in favor of renewing the current board on April 23rd. Are you confident that that means that other players that are more reluctant will fall in line and agree with them?
Yes, I think that what was stated by ISS and Glass Lewis is important, both in absolute terms, because it's a confirmation of the good job that we did in the last 2 years, because we are discussing today, but this is a long shot that we started at the beginning of 2022. And we did a great activity to explain why it was the right path. In the second, but this is important also in relative terms, because ISS and Glass Lewis try to compare the alternative to this plan. At the end of the day, what they state is that it's better to stay on the right track of a project that started 2 years ago.
Yeah, and you also have the full backing of the Italian government. Now, if you look at Telecom Italia shares, they're still at quite a big discount compared to peers. Why are shareholders reluctant to buy the stock as much as you think they should?
But in any case, if you know, our stock was a stock that had also, in the last year, a lack of trust by the market. Also because in the last 14 years, our company was able to achieve the target and the guidance only 5 times. We are trying to recover the trust from the market because in the last 2 years, for the first time after 14 years, we were able to achieve in 2 consecutive years the guidance. But in any case, as you were mentioning, this is a premiere. What we are doing is something different from what happened in the past. And so everybody's at the window to try to understand what will happen. It's clear that there is this kind of difference from the past, innovation that can scare someone. And in the meantime, also the fact that in the past we didn't deliver what we promised is putting some people on a kind of wait-and-see solution. Then it's clear that also there were some rumors in the market that the deal with KKR should be delayed. And it gave to a lot of people some fears related to the fact that if it will be delayed, there could be some issue. But to keep everybody in a more safe area, we release a press office on Monday explaining that we are on track, and in any case, we don't foresee any kind of issue also in a case of possible delay. That we don't foresee. We are very confident
so basically,
that the deal would be good.
Yeah. But Mr. Labillard, so basically you're not saying that they're not buying the equity story, is that they're either worried, right, investors, that this will be delayed, and so question mark on what happens, or they're actually worried about the execution of the deal, and this is something that you'll have to prove going forward.
But I don't have to accept to you that continuity is something that is very important for the market. So I think that there will be a lot that are at the window waiting for the General Assembly to see that everything proceeds and there's no discontinuity. But this is not me. This is what also was stated by ESS and Glass Lewis, explaining that the continuity is what guarantees the best for the company. And if you are a shareholder, sometimes we are in the middle of April, you can wait 10 days to see what's happened to the General Assembly. So it has nothing to do with the industrial story. It's something different from the reality.
Talk to me a little bit about the investor firm Merlin. So this is one of the main opponents to the re-election, actually, of the board. Something else that they've put in the line is that you should sell Telecom Italia's Brazilian unit. This is something that generates a lot of cash. So what do you make of that proposal?
First of all, it's 2 years since I arrived. Everybody was saying to sell Brazil. If I've been sold Brazil at the beginning, today I should face the issue of all the shareholders that should ask me why we undersold Brazil. If we look at the industrial story, and then we'll talk about the financial aspect, the industrial story, Brazil, after the sale of the network, will be 45% of our EBITDA after lease. So it will be an important component of a well-balanced portfolio of activity, with Brazil that is a cash cow, team enterprise that is a fast-growing business, and consumer that is a business that must be restructured and merged with someone. So why we have to sell the Brazil losing this well-balanced situation? If you look at the financial point of view, everybody are forgetting that we have on the table 5 billion euro upside that can come from the earnout from the sale of the network, the sale of Sparkle, and the last also the litigation with the Italian government. So if you have the opportunity to get 5 billion euro of upside, why have to sell an asset that is an important element in the industrial story? This is what I don't understand.
So you're telling me that's a no. Yeah, so you're telling me that's a no. Do you think you'll be able to get them on side by April 23rd? And the same question is also for Vivendi. That's not opposing the deal, but that says actually the valuation is not high enough.
But I think, as I mentioned also the last time that I gave the opportunity to have an interview with you, is that I'm discussing with all the shareholders, because I think that is important, the convergence of everybody on the best for our company. So again, if I look at the evaluation that are coming from the analysts that are much higher than the actual value of the company, if I consider that none of them have included the potential upside that can come from this 5 billion, if no one is including also the opportunity that we will have to be part of an important market consolidation in the following years, I think that we have the opportunity to allow to this company to be back to grow, and perhaps also to have in the future a shareholder remuneration.
Yeah, and I know you've said it many times that you're working on having everyone's confidence, but are you confident that Vivendi will vote in your favor April 23rd? This is a very big shareholder.
Yes, I cannot say that I'm confident that they will vote. What is important is, in any case, in the interest of the company, that the slate of the board will be the winner, because it will guarantee continuity for the company. Vivendi is a rational shareholder, and what they want to do, because this is what they declared, is to increase the value of their stake to be sold. And I think that our plan is the best that can guarantee that.
Thank you so much for joining us. That was Pietro Labriola, there, the chief executive of Telecom Italia, ahead of that important vote on April 23rd. Now, coming up, traders pair bets on the ECB cutting rates after U.S. inflation tops estimates. We get market reaction from JPMorgan Private Bank's global head of investment strategy next. This is Bloomberg. Welcome back. This is The Pulse. Rate definitely in focus. Now, in the last couple of seconds, this just crossed the Bloomberg terminal. Traders pairing ECB rate cut bets to less than 75 basis points this year. This is after U.S. inflation topped forecast. I mean, that sent quite a lot of things moving in the markets yesterday. Now, let's bring in JPMorgan Private Bank Global Head of Investment Strategy, Grace Peters. Grace, as always, thank you so much for joining us. I mean, today, full on ECB watch, but then we also have those producer prices in the U.S., and there's even more, I guess, writing on that, given what we saw with inflation in the U.S. What are you expecting from the ECB?
Yeah, so what we're seeing coming through in the inflation numbers is some divergence. When we look at latest European inflation, actually you've got both headline and core coming in lower than consensus and the ECB expected, and quite the reverse of that yesterday in the US. And as you say, we'll watch for PPI, which will give us that steer on PCE inflation, which is obviously what the Fed follows most closely. When it comes to the ECB later, our expectations, like is priced in markets, is that they are on hold for this meeting, with the first cut coming in June. And in coming to that conclusion, we're looking at both sides in an absolute and a relative context. Inflation, I've mentioned, is lower, absolute, and obviously surprising so far to the downside in Europe. But growth is also much weaker. We do need to watch growth in Europe because it's weaker, but I think it's at that point where it's starting to actually improve. And so that could be something to watch on the inflation front. But I just don't think the ECB are going to have the information, particularly after yesterday's US print, to feel that this is, the meeting at which they need to first cut rates.
I just find it incredible. If anyone had told us at the beginning of the year that there would be this divergence between what the Fed would do and the ECB and even the Bank of England, I don't think anyone would have believed them.
No, I think that's fair. And the main delta in that is US exceptionalism around growth. And therefore, central bank policy, and obviously that's feeding into FX and into rate markets and equities as a result of that. So, no, I think that's been quite stark. But my sense is, as I say, globally, you are starting to see growth starting to lift across the board. Now, I don't think Europe's going to get anywhere close to US growth rates. The US is benefiting from a surge in immigration, increased labour force participation rate. All of that is boosting consumption. And I think those dynamics are not in play in the Eurozone to the same extent. But I do still think growth will lift in Europe as we go through this year.
I mean, is there a discount because of political uncertainty in Europe? I know there's the European parliamentary elections. Don't get me wrong, there's a big election in the US as well, which could change the trajectory. But is it discounted in the market right now?
So the European market is trading at a 30% discount to the US. it's been that way for quite a while, so I never see valuation alone as a reason to buy into an equity market. You need a catalyst. And I think when we look to Europe, which is a market that we are favourable about, particularly the larger cap multinational companies, the two catalysts that I'd point to is firstly this modest recovery and growth, and the fact that the ECB, we think, are going to cut rates before the summer, and that should be a catalyst for risk. The second thing is when we look at European balance sheets, they are totally transformed. We're actually in a situation now where rather than European companies being a net issuer of stock, rights issues and the like, that many still carry a lot of baggage when thinking about Europe, particularly European banks, around net issuance. Actually, Europe is buying back stock at a rate faster than it has in a very long time. And so when you look at the dividend and the share buyback yield, that total return story is stronger for Europe than it is for the US. So a couple of catalysts there that I think will prove interesting this year.
But if you look at the ECB, do they have to work that much harder if they're going against what the US does? So we're expecting something in June. I mean, the market repriced to about 75 basis points in total. I mean, maybe do they need to work harder?
I think that they'll be more mindful of making sure, obviously all the central banks are looking for evidence that we're on a sustained path back to their targets when it comes to inflation. And we saw very strong disinflation in the US through the fourth quarter that's obviously now starting to stabilise a little bit with these three inflation prints that have surprised to the upside. So I'm sure the ECB and the Bank of England will be watching that, and it just brings in that extra note of caution, which I think is what the market's pricing today. And then obviously rate differentials as well as growth differentials are a key driver of currencies, and so that will be another thing.
I was going to ask you how you play the currencies actually in this kind of environment. We've seen some huge, and then I'll ask you about yen and also some of the renminbi in a while. But if you look at euro dollar, does it make a difference in what kind of companies you want to be invested in?
Yes, I think, just in terms of the FX impact, certainly dollar strength with US exceptionalism feels more likely. I think in theory, Europe, when we look at particularly those large companies in Europe, many of them are exporters. And so, euro weakness in theory should help. But these things are always actually really hard to map because of hedges and everything that companies have in place. But I think that recovering European growth dynamic equally could support the euro. So I think actually when we're thinking about FX, it's probably one of the hardest asset classes at the moment to balance. But whether it be in fixed income or in equities, I think there's a good story to be had for Europe at present.
Grace, when you look at US debt, and this is one of the big questions, is there going to be a credit event? And I know everybody ignores it, and then in like 2 days, every couple of quarters, people freak out because of someone from the budget responsibility saying something in the US. It's amazing that it hasn't really come into the US election yet.
No, it is absolutely one of those factors that we're all watching and that we know is on the horizon and does cause fluctuations in markets, as we saw last summer, really, when you saw the US debt downgrade and yields move significantly higher as it priced in that term premia. I think whoever's in the White House, there aren't indications yet that either of the most likely candidates want to really tackle the debt problem. And I think markets are pricing a reasonably benign outcome at the moment. But it's one of the reasons when we're thinking about our fixed income exposures that, to be either shorter duration or neutral duration feels comfortable, but it's one of the things that argues against going very long duration, given the inflation, as you say, and the debt dynamics.
Grace, thank you so much. Grace Peters from JPMorgan Private Bank stays with us. We'll talk a little bit about yen intervention. That yen intervention watch continues as the currency slips further past the 153 level to the dollar. We'll discuss that next, and this is Bloomberg. Welcome back. Now, Japan has warned that it will consider all options after the yen slumped past the 153 level. Still with us, Grace Peters from JPMorgan Private Bank. Grace, we talked about intervention, so we're looking at China and of course, Japan because of the currencies. What does that mean for your investment portfolio with Japanese equities?
Well, we just spoke about investment opportunities in Europe, and I think when I add to what else is interesting outside of the US, where, post the inflation print, I think equities could be a bit more range-bound in the US. So Japan is another region that we think benefits from improving global growth and a strong domestic story. And the domestic story is very much around, an element of reflation for sure, but really it's the shareholder return story when you think about the cash that's been trapped for a period of time on Japanese company balance sheets. But now actually there's incentives to start unleashing some of that capital to shareholders, which is quite important.
And that's across all sectors?
That's across a large number of sectors. And when you look at market valuations on 16 times forward earnings for Japan, that number encapsulates the cash. So actually, i.e. the market is ex-cash cheaper than it looks on a headline basis, demonstrating earnings growth benefiting from the domestic and the global recovery, and as well that improving shareholder return story. So I think that's going to get quite a lot of attention still.
Grace, thank you so much. Grace Peters there stays with us. Of course, next, Bloomberg UK as traders pair bets on Bank of England rate cuts. So we'll talk about the BOE. We'll also talk about the Bernanke review. That's coming up shortly. And this is Bloomberg.